Cool beans, cool beans. Welcome to the weekly wrap up. You're tuned in with Mr. Levels and KMentals, aka the Icy Spicy Unicorn. She's about to get into these fundamentals, and when she's done, I'll go over the technical wrap up. So I'll pass it on over to Carmen. It's all yours, Carmen.
Cool. Hey everybody. So for the fundamental wrap up for this week, we're going to go back over just some of the earlier events that happened on the Forex Factory calendar, and then just talk about how all this is going to show up later with some of the more future news items. So we started out this week with bank holidays just because we started a new year. And we really didn't get any important news for the US until Wednesday. And Wednesday, we got job openings, ISM manufacturing numbers, and then we also got FOMC meeting minutes. So, with the news that came out on Wednesday, ISM manufacturing was pretty flat. It was pretty much on par with what was forecasted. And then JOLTS job openings showed us that we could anticipate having higher job openings on the federal level and the way that the Bureau of Labor Statistics counts it when it comes to Friday's non-farm payroll numbers. And then for the FOMC minutes, we learned from the Fed that um, they're still continuing and planning to continue to move forward with their plan to increase interest rates. And still with the same sentiment also that the Fed is willing to allow the economy to overheat slightly. If it means getting inflation under control, if it means getting the economy under control and pricing, then they will do so. On yesterday, we got the ADP non-farm employment change, which also showed a growth in jobs. So this also was another indicator that coming into non-farm payroll that we would have um, an increase in jobs out there. And then as well as having an increased number of jobs, we had a decrease in unemployment claims over the past week. So that was another indicator that job numbers could potentially be positive. So moving into today, for non-farm payroll, we actually had an increase in jobs by 23,000. The unemployment rate did fall by 0.2%. However, what kind of took some of the wind out of the sail for non-farm payroll was the average hourly earnings, which actually came in 0.1% under forecast. However, when we start to look at average hourly earnings, and on average how much they move from non-farm payroll to non-farm payroll, it doesn't move a lot. So this 0.1%, while it doesn't seem like a big number in terms of non-farm payroll and the average hourly earnings number, it is a big number. So this took some of the wind out of the sail. And as we start to look at what this could mean possibly going forward, it means a couple of things. So first, when we think about the Fed's plans to cool off the economy and to slow the labor market, we just had, and it was shown 3 times this week that we had an increase of jobs on the marketplace. However, something that could possibly balance that out is the fact that those jobs aren't paying out as much. So, one of the reasons why the Fed has said and has wanted to close um, or um, tighten up the labor market in the United States is just because when people have more money to spend, they go out and they spend it. And if you're able to dry up some of the money that floats around in the economy, People don't have that money to spend. So this means that items sit on the shelves a little bit longer. And when when items sit on the shelf longer, retailers are more likely to cut prices to go ahead and get rid of it and hurry up and get it off of the shelf. So that's also part of the thought process that goes behind why you would possibly want to dry up the labor market, dry up money that's in the economy. And it's the revolving circle of how the economy works. So if you've never seen where this news comes from, there is a manila folder that you can tap. The source, this news comes from the Bureau of Labor Statistics. And I went ahead and pulled it up because I read through the report. But here, this is really cool because you can choose to read it on the internet browser. You can download it as a PDF. You can send it out and you can copy it so that it actually shows up on your website or whatever media links you have. You can only look at the chart, and then there's a spot where you can look at the commissioner's statement. So, for the sake of um, the call and just being able to see it all in one go, I'm going to open it up here as an HTML. So, the format is going to be a little bit different from what I've shown before, but we're just going to take a brief look at um, this week's non-farm payroll report. So as you're scrolling through, it'll give you the highlights. Everything that you just saw on Forex Factory calendar is on here, and it will go through and break down everything by region, by demographic, by sector in the marketplace. So for instance, here, you can go through and look at notable job gains. um, so there were notable gains in leisure and hospitality, healthcare, construction, and social assistance. Payroll employment rose by 4.5 million in 2022. Um, then you can go down and actually see that in December, employment in leisure and hospitality rose by 67,000. So um, these numbers, I read out that in particular because when you think back to COVID and you think back to the sectors that had the most disruption, leisure and hospitality was the number one sector, the number one industry in the US market that had a disruption. So to see those jobs come back, to see people being out, more active, social, traveling, um, that's really good for leisure and hospitality, but also healthcare and construction, because remember, people weren't working, people weren't buying things. Also, people were afraid to go to hospitals, and in some cases, hospitals closed. And then there was just a disruption in healthcare staffing. So a lot of hospitals were not able to staff properly. So that caused other members and within that workforce to leave just because workload was just getting heavier and heavier. So with all that being said, each sector you can go through, you can look at the numbers, and you can see the increase in those numbers here. There are also charts and graphs. So I actually like how this chart looks better compared to the PDF, just because the color's a little bit better, and it stands out a lot more. But you can go through and just compare and see for women, for men, it'll calculate pretty much whatever you want to know, whatever you want to see. We have looked at this before, but there is an interactive section on the Bureau and Labor Statistics website where you can go through and nitpick. You can create your own chart based on what you want to see. So you can um, go through and say, I want to look at males over the age of 30 or veterans um, who are able to work and are under 50 or whatever the case may be. However you choose to look at it, you can go through, pull out the numbers, and it'll show it to you. But this is how you actually go through and find those numbers and actually read the report for yourself. Um, just because I did want you to actually see the report. It's 43 pages. But the charts and graphs look like the ones that you see here on the screen. So, the Fed will take all of this information and will use it to then decide how high rates should go. So, while the numbers on the outside look good, it's also important to note that average hourly earnings decreased. And it's also important to note that um, we still have some adjusting that needs to happen within the labor market. So the thing that I always say about the January number is that we have to wait because we don't know how much of these jobs that are showing up in this report are actually seasonal jobs or actually temp jobs that have benefits or have some type of benefit and the employer is counting them um or the retailer is counting them. So I typically wait. I usually really start paying attention to non-farm payroll in February, definitely in March, and just kind of look at it to see what changed, what areas changed, what regions changed, and then just kind of go from there. That's why, in my opinion, it's important to go through the report and at least look at the sectors that it highlighted. Because when you look at the sectors that it highlights, then you can determine what kind of worker are they targeting or what kind of areas might have been targeted for the December number that weren't for the January number. And I'll go ahead and tell you now, based on what I just saw, based on what I read earlier, construction is definitely one of those areas where you can hire seasonal or temp workers because sometimes workers are just hired for one project. Also, healthcare. Um, Believe it or not, the majority of healthcare workers that work in a hospital or a nursing facility might not actually be truly staffed by that company or by that facility. They might be a temporary worker or a worker that comes from some type of staffing agency. They have benefits, but they work in each location on some type of assignment based system. So they're not always counted for a particular region every non-farm payroll. So they might be counted for the Northeast region for one, and then maybe the Midwest for the next. So that's one thing to keep in mind. And then also leisure and hospitality, because most leisure and hospitality jobs are seasonal, they're temporary, or they're on some type of contract, pay per, sign up or contract type deal. So those are the three out of what just came out that I would be paying attention to. So that's what I have for the weekly wrap up. I'm gonna go ahead and turn it over to Mr. Levels so that he can get started with the technical wrap up for the week.
Cool beans, cool deal. Appreciate you as always, Corman. Keeping us saucy, keeping us icy, and keeping us spicy. Let's jump into these technicals, everybody. See what we got going on. Um, let's look at the DXY as always. Go to our top down. All right. So if we go back to Wednesday night, we see that I had this price level outline here. We wanted to see price action um hold above the year ending, this market structure where we ended 2022, and we wanted to see the top of the market structure retested and previous buy side liquidity taken out. And so we did get that movement in price action and got that buy side liquidity taken out. We did not get our fair value gap as coined by the mentor, Michael Huddleston. We did not get that filled in. So let's wait and see what price action gives us for the opening of the new trading week. But with that being said, if we break down while top down from the daily to the hour, we see um, Wednesday we was over here at 8 o'clock. We was right here exactly from 8 to 9. And we wanted to set excuse me, we wanted to see, like I said, us hold above the year end in market structure and come back up to, I had this area outlined so we could fill in the liquidity void as coined by Michael Huddleston here. Um, so we see that we did get that filled in, and we wanted to see these even highs buy side liquidity and buy side liquidity to the left taken out, and we got that with ease. And then we ended the week back down to to come back and take out this sell side liquidity that we had up under um this liquidity board that we have here. So with that being said, if we go to our currency pairs, we see that we had the inverse move in currencies where the dollar gave us that up push and then down push to end the week. Um Currencies gave us that down push and then up push to end the week. So that's what we were basically looking for. Wednesday we was here. We wanted to see price push up and retest this market structure a little bit and then push down to take out sell side liquidity here. But price action just rolled on over to take out that sell side liquidity. And then as the dollar ended the week down, Euro USD ended the week up. Same thing with GBP USD. Came down, took out sell side liquidity yesterday. And then today we ended the week up. Looking at NZD USD, same play. Came down and took out sell side liquidity today, and then ended the week up. And looking at metals, same play. Wednesday we were here. I wanted to see this market structure here retested with filling in this fair value gap, but we just rolled on over and came down and took out the sell side liquidity and ended the week up. So good plays for silver, for currencies and silver. Gold, I told you guys Wednesday that gold looked a little iffy. She was doing her own thing. So was here. So we did come down to take out sell side liquidity. And gold actually ended up giving us a better pullback than our currencies. So it ended up playing out in our favor to what we wanted to see happen. Um, and we ended the week up 1865 for gold. So good play for metals as well. And looking at oil, we did get back up to fill in this imbalance. All right. Retest the market structure and ended the week down like the dollar. So um we'll see how all opens up for the new trading week. Um U30, we did get our imbalance filled in, and with the retesting of this previous swing high market structure here, that was beautiful, easy money. So that being said, I'll take a look at crypto as always to close it out. Looking at Biddy. Biddy um gave us the retesting of our level at 16.7 and then shot up to get up into that fair value gap here that I told you guys that we had been targeting ever since we created it back in the second week of December. So we got back up in there, retested 17,190 and 17,200 actually. So yeah, but we filled that in. That's what we wanted to see. That's what we discussed Wednesday night. So we got that, and then price immediately backed off of that area and sold off and ended the week around 16,900. So we know that we'll be trading through the weekend for crypto. Crypto stays open over the weekend. So we'll see what it gives us over the weekend and going into the new trading week for regular markets. And looking at Ethereum, we got somewhat similar price action. Um, we didn't fill in this imbalance like I wanted to. Wanted to see us get down and retest this market structure. That's probably why we didn't get a good pop up. We may come on down and retest it now, take out this sell side liquidity here, and go ahead and fill in this imbalance and retest this market structure and continue to the upside to retest 1350. And ApeCoin is still at $4. Um, we did come down off of that market structure. And Wednesday we was here. And so we did come down to take out this sell side liquidity. Let's see if Ape can get back above 420. If not, we will probably see it come on down and fill in this little imbalance we have here with this liquidity void. To the downside, we may see that area filled in and retested before we continue to the upside, if we do indeed continue. So with that being said, that will bring the technical wrap up to a close. Um, I hope you guys had a great trading week. I hope you guys are having fun with the paid in pips indicator. I hope that you review Wednesday night's class. That's the first class of the year. Um, and so I hope you reviewed it because that class has all the information that you need to know about the indicator. Corman breaks it down quite eloquently. And so please go and review that if you haven't already. So I hope you're having fun with it. I appreciate you guys helping me with the back testing. We will be back testing it for about another 3 weeks before we go to market February the 1st. So have fun. Make sure you're trading in your demo accounts with it because I don't want you guys trading with it live until we take it to market because we need the solid back testing done and complete. So, with that being said, you guys enjoy the rest of your week. Hope you have a fantastic and a wonderful weekend. I appreciate you tuning in tonight, coming out, getting this knowledge and empowering yourselves. Let your family and friends know you love them while they still here, please. And as always, peace and love, everybody. You know